bucks. So as promised, I'm making a live video of my options portfolio so that you can track it throughout the day and really get a sense of how these things kind of happen and play out day on day. What you can see right now, there's 5 different options. An option in Blue Apron, a put option, a call option in Blue Apron, a put option in Boeing, a put option in McDonald's, and a put option in Square. As you recall from my other videos, a put option makes money as the underlying stock depreciates in value, whereas the call option makes money as the underlying stock appreciates in value. One thing to really explain to you guys, which may seem counterintuitive, is the fact that I have a put option in Blue Apron and I have a call option in Blue Apron as well. So that can be somewhat counterintuitive, right? As I make money in the call option, I'm losing money in the put option. And then as I'm making money in the put option, I'm losing money in the call option because they're both linked to the exact same security. So how on earth could that be profitable, right? We know that it's not uncommon for an options investment to make 200%, 300%, 400% return. Let's say we make it, for the sake of this example, let's assume that I purchased 5,000 in both. I'll explain why I didn't a little later. If I make a 200% return on my call option, that means my position increases in value by 3 times. So $5,000 investment is now worth $15,000 investment, which means I'm making a $10,000 profit. I make money in the call as the stock appreciates, but as it appreciates, I lose money in the put option. So there's a good chance that if I make a 200% return on my call, I'm probably going to lose this entire investment in this put option. So think about that. I lose $5,000 in this put option, but I make a $10,000 profit in my call option. So on a net basis, I just made $5,000. And the same thing if the roles reverse, right? If the stock declines significantly, I made a 200% return on my put, I will likely lose the entire $5,000 investment in the call option. But if I make 200% return on the put, that $5,000 is worth $15,000 now, and we're back on a net basis making $5,000 overall. So what we're doing in a very, eloquent and slick way is profiting off of a significant move in an underlying asset, right? It doesn't really matter if the stock goes up. It doesn't matter if it goes down. What matters is that it does one of the two, and it does it to a large degree. As long as it does that, we make money on this trade. And the reason that I actually invested a little more in the call option than the put option is because I didn't want it to be on a 50-50 basis, right? I wanted it to be a little more skewed to the call option because I do actually believe that Blue Apron is well positioned in the current environment that the coronavirus has put us in. I think there's more chance that it'll go up significantly today than go down. So I'm slightly skewed towards the upside just so that I can capitalize on that a little more. So it is approximately 9:50 a.m. right now. It's been 20 minutes since the market opened. 20 minutes since the market opened, and you can see the day gain here. Losing approximately $1,200 in the put options. I've actually sold 3 of the put options in Blue Apron just because I kind of see the trend that's going to happen today. So I still want a little bit of downside protection, but I'm pretty confident in this call option at this point. So I kept the 7 call contracts for Blue Apron and sold 3 of them. But right now, losing $1,200 in that put option, as we mentioned, up $6,500 in the call option, up $630 with the Boeing put option, up $2,400 with the McDonald's put, and up $100 with the Square put option. And this is only 20 minutes after the market opens, so kind of just giving you guys a real-time feed here.